115 million people own Bitcoin right now. It's the most widely held investment asset in the world. And we're adding 2 million users a week. So 2 million people a week are coming. It's growing very fast, and yet it's still the size of the internet back in 1997. You know, like it's back when people are like, this internet thing, well, is it a goofy thing or is it a necessary thing?
Yeah.
That's what I think. So I think, yeah, if you're an investor, why wouldn't you want to buy into something that solves a basic need for billions and billions of people? And why don't you do it while 98% of the world doesn't really quite understand it? Because when they understand it, you know, everybody understands. My 22-year-old niece understands Apple and Amazon now. Okay, but it's a bit late to be expecting a massive windfall when you're buying a digital monopoly that a billion people all use every day.
And that's the point. Don't miss out. Hold tight, Michael. Frank, I want to have you weave in a little bit with gold, because gold has also been really important over time.
Crypto winter. You know, the crypto winter was when the SEC went after all these bad ICOs, and you had lots of a negative narrative against these, in particular the ICOs, and that dampened Bitcoin. And we had JP Morgan at the time, nothing but negative narrative also. What's interesting is that the bottom of Bitcoin took place when JP Morgan came out and announced their stable coin. And then we had the Libra come out, the Libra idea with Facebook, and that made Bitcoin explode up to 14,000. And then the G20 countries got worried about it. They all of a sudden, lots of regulations pushing it down. And then you have the halving. So we're seeing this sort of perfect scenario, and now we're going through a correction again. And that correction is going to be, I think, much shorter than the previous winter, which we experienced. But the regulatory announcements that are taking place right now, there's lots of negative narrative. And this just creates a sentiment factor, but it doesn't change when you read the other news, such as PayPal creates fractions. You're able to buy fractals of Bitcoin. You can't buy an ETF on PayPal. You can't buy a stock on PayPal, but you can buy Bitcoin, and then you can immediately convert that into buying a TV. I think this is the big game changer, and this triggers a MasterCard, Visa. Every other week you get some news of this sort of adoption process for the masses. So I'm very, very bullish on that scenario to try to explain to people, the investors, because now I'm hearing that, this crypto winter is going to happen. It's going to be a long period. I think it's very short fused. We had a meeting yesterday, and CC, he's very blockchain and crypto friendly. He just wants to make sure there's no bad guys in that industry and to go after them. So I remain very bullish and constructive. Much shorter winter that we've pretty well, I think, hopefully is over here. The next visual is on gold. So,
Frank, really quick, we've got a ton of great questions from advisors, so we want to make sure we make up a little time here.
Yep, I'll try to go quickly, but why gold? Let's hop to the next visual. Gold has been around, as you know, 5,000 years, and Indian women in particular wear 6 times the amount of gold that's in Fort Knox. It's protected them from all the changes in governments, corrupt governments, monetary debasement of the currency. So this is not going away. And if we take a look at 30 years ago, China and India were basically consuming about 10% of the world's gold. Today, they're at 55%. And it's highly correlated to rising GDP per capita in this part of the world. And so this idea of gold all of a sudden becoming extinct, I don't believe it, because people like to wear it. What's really interesting is this visual for me is the inverse relationship between gold, and it also relates to Bitcoin. And what we're seeing now is all-time negative real interest rates. And I think Michael basically going and buying debt, negative real interest rates, is he's much further ahead of the curve on being able to borrow. And this is unprecedented real negative interest rates. and I'm surprised that gold hasn't popped here in the short term to over $2,000 is where roughly the model was said it would do it. But it takes time. But I just think at this negative real interest rate environment, it's not going away, and it makes a very bullish scenario for gold longer term, because 40% of the markets in gold are related to fear and negative real interest rates. And I remind investors that since 2000, gold has outperformed the S&P more than 2.5 times. So Ray Dalio's positioning of gold in 10% and rebalancing on a regular basis has helped him grow to become the largest hedge fund manager in the world. Next, please. So this is another data point that over the past 20 years, 80% of the time gold has been up. And Bitcoin, remember, to remind everyone, is a creation out of the crisis of 2008. So it doesn't have that longevity yet, but it's a very important part of this concept of making it part of your portfolio. Next, please.
Yeah. So quick question here, Frank, for the advisors. Do you think gold and Bitcoin can be a part of a diversification in your portfolio? So when you look at your portfolio, do you believe for you and your clients that there's a spot for both gold and for Bitcoin? So that'll be interesting. Again, I'll leave that up there. So Frank, make the case for inclusion of both.
Well, when it comes to the golden rule, the 10%, one of the big parts of asset allocators, which we saw earlier, is volatility. And when an asset class becomes, the greater the volatility, the less you should have exposure to it in that diversified portfolio. And so when I look at that model and try to model it, because Bitcoin is so new, having a 2% to a 5% weighting is just wise and prudent for a host of reasons. And so that is one reason why I've advocated having your 10% exposure to gold in that diversified portfolio, like the Ray Dalios of the world, and having an exposure from 2 to 5% in Bitcoin. And if that makes you worried, then you should deeply consider a MicroStrategy as your positioning of it. High blockchain I know has been recognized as a proxy for owning the space. Next, please. So many people listen to the Oracle of Omaha, and he hasn't been always right. He says he missed Amazon, he missed gold, he doesn't like Bitcoin. Last year, this time, he was all negative on the Jets. And I like to remind everyone that 25,000 Robinhood investors bought Jets between $12 and $13 before it more than doubled. So what that means is that the lineal investors that are coming in, and they're the faster, much more readily to accept and embrace Bitcoin and this thesis on it. And I think that that's important for all investors to recognize that you have to almost move. They've been very accurate. And I would say to you that having a position in Bitcoin or proxy for it is just wise. And I would actually ignore the thoughts of Warren Buffett on this.
Okay, Frank, let's talk a little bit about blockchain. We hear a lot about it as well. So what are important aspects of this that advisors need to understand?
Well, the big operative word comes with a metaverse is the most recent word, but I think the idea of triple entry accounting, the breakthrough for the financial world came from the Medicis and the Venetians in the 1400s with the concept of double entry accounting. And I know a friar basically came out and codified it, what the best practices were for it. But it lent itself for the creation of a debt market, for trade, for bills of trade. And it also created a middle class. All the new merchants could get debt and borrow from a bank, and it grew. Nothing's really evolved until like 91, when telecom industry basically created the blockchain. And I think it's interesting it stayed quiet until Satoshi comes out with Bitcoin, and it validates this concept of triple entry accounting. And when the major accounting firms have written about it, and it's just slowly being embraced, and I think that's going to take a longer process, but it's very significant for the long-term prosperity for owning this as an asset class. I believe that Fidelity captured this concept very early. And Fidelity also helped Hive Blockchain get launched with $100 million of capital in 2017 because they were basically mining Bitcoin in their back office, and they have their own Google Labs. And they wanted to have a vision that all trades and transactions would be on the blockchain. So I think this is evolving, and the now big operative word is the metaverse. In particular, last week with Zuckerberg talking about it something like 20 times in talking about Facebook and the vision and the future. And I believe it really fits into what Micheal Saylor wrote about in the mobile phone and the significance of the mobile phone. And I would like to ask him, how does he look as that fits into a book he wrote years ago, The Metaverse?
Hey, Michael?
Yeah.
Okay. So Frank's asking you about the book that you wrote, and then also about the metaverse, and most importantly, as far as advisors understanding the benefits of blockchain. Look, Bitcoin aside, understanding blockchain and the benefits and what that's going to mean down the road. And
the most important thing to remember about Bitcoin is it's the future of property. Bitcoin is the highest form of property rights the human race has yet to devise. If you have $1 million and you want to hold it for 1,000 years, then you have to figure out how it doesn't get taxed, impaired, seized one way or the other. And then how are you going to either use it to finance something or generate yield on it? The whole idea of Bitcoin is that property is now in the form of private keys, and you can take those private keys with you anywhere on earth. You can put them in a computer. You can take them to the grave with you. We've never had a form of property in the history of the human race that you could literally die with and take to the grave with you. Bitcoin is that one thing. You can't do it with gold. You can't do it with land. You can't do it with Picassos. You can't do it with stocks, bonds, buildings, timber rights, nothing else. So if you're thinking about the future, then the idea that property rights need to be conveyed to 8 billion people is a critical idea. The idea that they're going to flow over a mobile phone to the 8 billion people is an obvious idea. The question is, what's digital property? And the answer is Bitcoin. So how much is that worth? Well, presumably it's worth like half of everything in the human race. That's what it's worth, right? So it's the biggest idea I think that any of us have seen. It's bigger than Apple or Amazon or Facebook or Google. It's old enough to see that it's going to be successful. It's an opportunity. So I would say to anybody, now's a good time to study it. I've got a website called hope.com, and I put a bunch of stuff about Bitcoin on it. I tell people Bitcoin is hope, because Bitcoin really is hope for property rights for 8 billion people, but also because it's such a high quality apex property, it solves the balance sheet problem of every government and also every corporation. Every company's got a problem. You can't hold negative yielding debt. If you're holding $10 billion worth of debt that yields 2% interest and the money is being debased at 10% a year, you're losing 8% of your balance sheet a year. So if you want to solve the problem of monetary debasement, or if you want to give property rights to 8 billion people, or if you simply want to get on the next big tech trend, the idea is simple. It's you take a block of $1 billion, you put it in Bitcoin, and you program it to think 1 million times a second with a computer. You move it at the speed of light. And that is the basis of the 21st century cyber economy.
Yeah. Hey, Frank, so obviously MicroStrategy is a great way to play Bitcoin. You are running a miner. So talk a little bit about that and how that's different and how you can also get representation for cryptocurrency.
Sure. Well, 4 years ago, I tried to, a little over 4 years ago, come up with a ETF in Bitcoin, and quickly recognized it wasn't going to happen due to concerns of anti-money laundering laws and KYC. And when I learning about the industry, the significance of crypto mining is that you do not have that. You basically create the virgin coin, and I'm a big believer that if you hodl that, that it's going to go up in value, not only just because Bitcoin is going to go up in value, but if you have these clean green coins that have never been in cyberspace in transactions, it's like holding an original Babe Ruth card. And they're going to have their own value. And so with that, I said, this would be a great idea. There's no ETF. If I'm hodling it, it's a proxy for this new vibrant industry that's growing rapidly. I also noticed that conferences like these ETF conferences, they're nothing compared to when you go to a crypto conference. And you were recently, Tom, at the crypto conference in Miami. And
it was crazy. It was a religious experience, Frank.
12,000 people spending $600. Wales had to spend $15,000. This has happened many times all over the world. So what investors have to recognize is that the ecosystem for Bitcoin with 10,000 nodes around the world and Ethereum with 30,000 scientists around the world, it is so big and so deep with intellectual capital that are believers of this. It's just not going away. And you saw that with that first crypto conference. And so Hive is really thrilled. It's done what it said it would do by mining both. We've been fortunate that we've so far the most profitable crypto mining company. And we continue to grow our petahash that we should be at an exahash in the next 5 to 10 days. And then we'll double that again in mining Bitcoin. We hodl. That means we hold on for dear life and basically put in that cold wallet all of our Bitcoins. And we put the majority of our Ethereum also into a cold wallet. And we sell Ethereum Classic to pay our electrical bills and some of the Ethereum to upgrade and buy new equipment. And so that is, Hive has been our equivalent to an ETF. But when you're looking at these investments, it's important that they are hodling. And that is what MicroStrategy has done a phenomenal job of narrating the story and positioning that you get a technology company and you get a huge position and upside in Bitcoin. And when you own Hive, you've got future growth. So you get this optionality, but you're getting both Ethereum and Bitcoin.
Yeah. So for the average advisor out there who is not going to open up Coinbase accounts for their clients, but they want an allocation, MicroStrategy publicly traded, Hive publicly traded, both hold cryptocurrency and continue to gather more cryptocurrency. More cryptocurrency, the more value appreciates. And to many degrees, in both cases, maybe even faster than the cryptocurrency itself. So really good. They're great alternatives for folks. Back to gold really quick with GoAU, Frank. It's a little bit different than the other ETFs that are out there because you really focus on royalty names. Why royalty names in the portfolio and how are they different from typical miners?
Well, it's very much, it's a very superior business model, and it's much more like a SaaS model that which you have in technology companies. It has recurring revenue. It has high gross margins. The biggest thing I think these royalty companies today going forward can learn at is start holding their gold. If they really believe in gold as a precious amount, and it's very difficult to find gold, that the thought process of there's peak gold. But you know, when I first came out with the gold royalty concept, and I was fortunate to take the first public company was Franco-Nevada, and Pierre Lassonde is here. That also he created the GLD, the gold ETF. That was his idea when he was the head of the World Gold Council. He's a billionaire that's now doing a lot of work in philanthropy. So he's very busy from universities and what he's doing, but he's a great thought leader also, Pierre Lassonde. I think what's important is that we created a product, GoAU, that's very much digital. It's quant driven, and it's quant driven how it picks gold stocks, and it's outperformed the bigger gold ETFs, and they're basically market cap weighted indexes. It's much more selective with a focus on these royalty companies because they have very much this recurring revenue SaaS model. or also it picks any gold stock that has the highest returns on invested capital, strongest free cash flow. These are important metrics that have always outperformed over the long term. And even short term, since we launched it, it's done exactly what the model on regressional studies suggested it would do. And so with that, it's once again, it's a digital approach process of looking at gold stocks. Next, please.
Yeah.
So we favored these royalty companies, and I was the seed investor in the creation of Wheaton Precious Metals, in addition to taking Franco-Nevada public in 1983. And both of these companies have done a phenomenal job in generating huge exposure. And I've found that there's many non-gold oriented investors buy these companies as a proxy on gold because of their sort of tech SaaS model. If you looked at Franco-Nevada, it has $25 million of revenue per employee. When you look at crypto mining companies, you get that same sort of dynamic that we're running now at Hive, $10 million of revenue per employee. And that gives us sort of a unique aspect. And for those that are interested, in getting in Bitcoin, Ethereum, there's another way, just like for non-gold investors, to look at royalty companies. I think looking at companies like MicroStrategy is just wise, or Hive.
Yeah. Final question for the advisors. Are you considering starting or adding to a position in either of these assets, gold, Bitcoin, both, or neither? I'll leave that up there. We've got some great questions. And Micheal, I'm going to toss this one to you. This advisor is asking, there have been environmental concerns, not only in the gold mining space for years, but now in the crypto mining space. Talk to us about the Bitcoin Mining Council, and it's all about in terms of addressing some of these concerns. What's the goal here?
I think that some concerns had popped up earlier this year, but mostly they were either ill-informed or they were stories planted by competitors to Bitcoin, and there wasn't a lot of substance to them. We formed the Bitcoin Mining Council, and we surveyed about 30%, almost 1/3 of the hash rate of the entire worldwide network. And what we found was, on average, the energy used by Bitcoin miners is about 68% sustainable energy. And we estimated that everywhere in the world, the average is about 56% sustainable. So it turns out that Bitcoin is actually the most environmentally sustainable industry in the world. There isn't any other major industry that uses more sustainable energy than Bitcoin. And as for the amount of energy, it's like 0.1% of the energy in the world. So it's a de minimis amount of energy. It's highly sustainable. And since those popped up about 3-4 months ago, most of them have disappeared. People aren't really that fixated upon ESG concerns for Bitcoin mining anymore, and they've moved on to other topics.
Yeah, Frank, as a miner, how do you address it at Hive? And what would you say as far as addressing these types of concerns?
Well, first of all, there's lots of misinformation that was out there. We do know that China was the biggest crypto mining, in particular Bitcoin, and they were using a lot of coal. That's all been shut down. And I think it's very positive that the Bitcoin mining and pools are moving to North America. I know for our own Bitcoin mining, we've moved to Foundry's North American pool for better transparency. And I think there's this sort of big shift. Hive is very fortunate because being a fund manager years ago, I saw this in the gold mining industry. This concern and this growth of ESG has started a while ago, and it was just gaining momentum. And so Hive has always had this position of having an ESG strategy and being green only, using hydro and geothermal. We've yet to see something where we can put our teeth into that solar and wind, but we're exploring it in a very strong way. But right now it's been geothermal and hydro, so we've been green only.
Okay, great. Hey, Micheal, a couple questions regarding risk. So what threats exist for cryptocurrencies in the next 5 years, and how should investors manage against this risk?
Well, first, I don't think you should invest in cryptocurrencies. I think the only cryptocurrency that is investable is Bitcoin, and I think Bitcoin is not a currency. So the name currency is really confusing for people. Bitcoin is a crypto asset and it's a property. So the risks are all in the cryptocurrency area, but none of them should anybody being invested in. The risks have to do with stable coins because they need to come under AML KYC regulation like Tether. And then the risks are in the DeFi area, and the risks are around anyone doing decentralized finance because they're going to cross over requirements that they get registered as securities exchanges, and they'll either run afoul of the SEC or the CFTC, or there are risks with ICO-based tokens. They're security tokens, and they might be unregistered securities. So none of these things have anything to do with Bitcoin. And so I think the key everybody should keep in mind is Bitcoin is the one safe crypto asset you can invest in that's clear. Everything else, has huge amounts of legal, regulatory, technical, and competitive uncertainty around it. And if I were a conventional investor, I wouldn't invest in any of that stuff.
Okay, that's great. Hey, Frank, investors are hesitant to invest directly in Bitcoin or Ethereum. So if they are, where would you suggest they start educating themselves? I mean, this is a great platform right here. And Michael, to get your opinions, would it be, and talk about Bitcoin and Ethereum miners such as Hive, and also ETFs that hold crypto miners. I mean, there are a lot of choices out there.
Yeah, there's many choices, and Hive it mines Ethereum also, which is a smart contract. And it has a complete different ecosystem, I would say, in the crypto space. They're always pushing for a proof of stake over proof of work. Today's supposed to be a big day. So the Bitcoin ecosystem is very focused, and I think is much stronger in that narrative. But smart contracts are all part of stable coins and the growth of stable coins and the growth of DeFi and NFTs. So it provides another sort of looking at the apps of blockchain. It seems that the backbone of a lot of that is Ethereum. So that's why we mine both and we hodl both. And we will continue to more rapidly increase our exposure to mining Bitcoin from that end. But I think that investors should take a look at the mining companies such as Hive, biasly speaking, and MicroStrategy, because you're buying two businesses at the same time. When you buy Hive, you've got two of the biggest cryptocurrency coins out there, you'd say, and that is Ethereum and Bitcoin. Bitcoin being much bigger, but you have one and two. When you buy MicroStrategy, you're buying a technology company which is highly leveraged to Bitcoin rising dramatically. And I think you'll get that much bigger bang for your buck, like I've seen over my 40 years of investing in picking gold stocks. If you have a gold stock that's growing its revenue and its cash flow on a per share basis faster than the underlying commodity, that particular stock will far, far outperform. And that's what these gold royalty companies have demonstrated. And I think that MicroStrategy is very much like that business model.
Yeah. Hey, Michael, in the world of the investment advisor, our job is to do the best job we can for our clients. You're obviously familiar with traditional asset allocation, the 60-40 model, trying to get people through their retirement years so that they have enough money. Do layover Bitcoin allocation for the average investor. If you're managing money in a 60-40 portfolio for a client, and Bitcoin has to play a role, how much do you put into that 60-40 allocation? And frankly, where does the money come from?
Well, my view is that you have to revisit all these models over time in order to make sure they're still relevant. So the 60-40 model for portfolio was put 40% in bonds and 60% in equity. And that made sense as long as interest rates were coming down. It worked for about a decade from 2010 to 2020, but it's not working anymore. I mean, if you invest, TLT is down 11.4% year over year. And so you're getting destroyed if you're holding bonds in your portfolio right now. And since interest rates are pegged at zero, I can't see how you can really hold bonds. They're all negative yielding. So I would say that the 60-40 portfolio is becoming, amongst most investors, a 90%, 10% portfolio. People have given up on bonds, and they're all looking for other risk assets of some sort of alternative assets. I think that diversification in general is a dangerous concept, because people think they're diversified if they own 20 stocks. But if all the stocks are value stocks correlated to the Argentine peso, and the peso goes to zero, the stocks are going to zero. So as Dalio says, he says people underestimate currency risk. I think that diversification has to be thought of along multiple dimensions. How diversified are you versus a technology risk? How diversified are you against currency risk? How diversified are you against execution risk? And when you construct it that way, the implication is you probably ought to be way underweight bonds, because all bonds are pretty much currency instruments. And then with regard to Bitcoin, I think Bitcoin is diversified. For example, I am more than 100%. I think MicroStrategy is probably 700% invested in Bitcoin if you look at our capital. So we're definitely more than 5%, right? We're more than 100%. But our view is you should be short the dollar. You should be short interest, right? If you can borrow money at 3% or 2%, and then you can invest in hard assets, then you ought to do that. So I wouldn't be holding debt at all. I would be issuing debt. I would be buying scarce assets. And if I diversified, my diversification would be across a portfolio of growth stocks that you think can outrun the monetary inflation rate, that are based on tech trends, and then hard, scarce assets that you think are going to hold their value a decade from now. That's my diversification.
And that's great. And I think we have a lot of advisors that are agreeing with you, but they're not fully in yet. The amount of money that we've seen to go into fixed income ETFs this year is a fraction of what we saw last year. The amount of money in money market funds, because people are taking their marbles and going home because it's not worth the risk, is gone over $5 trillion. So as we're shortening up duration, putting money in cash, looking for alternative income strategies, advisors have money that's liquid and available to put into a Bitcoin allocation. You know, is it a 2%, 3% allocation into a Bitcoin or a MicroStrategy or a miner like Hive appropriate? And again, I know your allocation is much different, but as we're trying to get away from the traditional allocation 60-40, is that reasonable to dip your toe in the water that way?
I'm well known for this. You don't have to invest all your money in Bitcoin, just the money you want to keep.
Okay. So listen, guys, that's a great way to end it. Really, really quickly, thank you. I know there's been, if you want to reach out, there's some social media connections there. Also, we hope to see you all in February 22 in Miami. I want to thank US Global for being such a great partner. If we didn't get to all the questions, if we didn't get to your question, don't worry. Somebody from US Global will reach out to you. And I want to thank Frank, Michael. This has been fantastic. We want to do this again soon and hope you enjoy the rest of your week. So thank you, gentlemen, so much.
Thank you. And thank you, Michael.